Purchasing a vehicle is a significant financial investment. With an average life of 8 years, this car would be your partner who would travel hundreds of miles with you. It'll be there for you in rush hour traffic, on long road trips, and just everyday errands around your neighborhood. So, what would be the best strategy to determining how much car you can afford? Hey guys, and welcome back to another video. Regardless of what the economy is doing, whether we're in the middle of a bull market where it seems like everything goes up, or we're in the middle of a bear market where talks of recessions seem to constantly loom for most of us, the need for a car is paramount. Today, we'll talk about a rule developed to help us figure out how much we should spend on a car. The best way to buy a car is none other than the 24-10 rule. The 24-10 rule advises on the amount of down payment, monthly vehicle payment period, and monthly transportation expenditures when purchasing a car. Financial professionals devised this rule to assist people in buying a vehicle with the least amount of risk. Now, you must be wondering what 24-10 stands for. Let's talk about it. 20 stands for making a 20% down payment. 4 means to pay the remaining loan in 4 years. And 10 means that your monthly transportation expenditures should be under 10% of your monthly income. Using the 24-10 rule. Using this method to buy a vehicle is a sensible financial choice since it allows you to get a car you can quickly pay for and maintain. The 20% down payment minimizes the amount of money borrowed, while the 4 years of monthly payments make loan repayment affordable and maintain the interest rate average. Additionally, keeping transportation expenditures under 10% of monthly income guarantees that individuals only buy vehicles they can afford to maintain without compromising other items. Especially in this world where rent or mortgage seems to be taking up more and more of our monthly expenses, having car expenses that are below 10% helps to keep control of our monthly costs. How does the 24-10 rule work? Now that you know the rule, the next question that naturally arises is why is it the best way to buy a car? The rule is effective because it takes into consideration that most people cannot buy a car outright. While it would be the most efficient way to purchase a vehicle, this is not the reality for many of us. This rule provides the perfect combination of the least amount of time, money, and debt required to buy a car. It ensures you don't take on more debt than you need, and hopefully prevents you from buying a car out of your price range. Let's break down the individual components. Rule number 1, put down at least 20%. Because monthly payments are cheaper on longer-term loans, most consumers prefer to put down less than 20% of the total car price as a down payment. In fact, as of 2022, the average car loan length has increased to 70 months, or almost 6 years. But this isn't the best way. Spreading the amount over a more extended period means the overall cost of your vehicle is so much more expensive. If you don't have enough money saved to make a substantial down payment, or if you're tempted to spread out your payments over a longer period, then it may indicate that you need to look for a less expensive car. Paying a 20% down payment can be challenging, but the 20% rule allows you to buy the vehicle that you want as long as you save up enough money beforehand. While buying a car, also remember that you would need to save up for unexpected expenses such as losing your job or significant vehicle repairs. Why is a down payment required when purchasing a car? Most of you know the answer to this, but it's still necessary to discuss. Lenders often need a down payment to show you're committed to paying back your loan. If you're following the 24-10 rule, you're going to try to give at least a 20% down payment on your car. Giving more down payment is always better, as it means you have a higher probability of your loan getting accepted. You'd be in debt less time, and you would pay less interest over that period. Sometimes, a larger deposit can also make you eligible for special programs and incentives from the dealers. Rule number 2. Finance for 4 years. In 2022, inflation is as high as it's been in almost 40 years. Along with that, the minimum wage has not risen to keep up. All this makes it near impossible for an average person to pay for a car outright. It's also why we've seen the average car loan increase to almost 6 years. But we challenge you not to fall for that. 6 years is a long time to pay for a car. While it may seem more affordable at the time, the longer the financing period, the more you'd actually be paying for the total cost of the car. Vehicles are notoriously bad investments when it comes to being a depreciating asset, so to pay more for it over a longer period of time means you're essentially throwing money away. The term of your loan will have a big influence on the amount you pay each month. A shorter period would mean that you would have to pay higher monthly payments. Likewise, a longer loan period would mean lower monthly payments, but you would have to pay more money as interest. It's better to keep the loan duration as short as possible, particularly if you can afford it. If you're tempted to finance for more than 4 years and cannot make a higher down payment, it may be best to take more time and save until you can pay that down payment and find a cheaper vehicle to buy. Rule number 3, keep total transportation costs to less than 10% of your monthly income. Keeping your overall transportation expenses under 10% of your monthly income can help you remain on budget and guarantee you can afford to acquire a vehicle. This covers monthly installment payments as well as gas and maintenance costs. Meeting this objective can be difficult if you are paying for an expensive vehicle, so be cautious and honest when assessing these numbers. When calculating transportation costs, remember to include insurance. Consider how much money you spend on gas each month, what sort of oil changes you need, how often your brakes and tires will need to be replaced, and other similar concerns. Also, remember that not all cars are made equal. Some cost much more to maintain than others. For example, if you buy an older car, you're more likely to pay higher for its parts. If you want to acquire a used car, keep the age in mind to know what issues may occur throughout the ownership. Advantages of the 24-10 rule. Using the 24-10 rule guideline when purchasing a car offers several advantages both during the buying process and for continuing vehicle maintenance. Here's a quick summary of the benefits that it provides. Firstly, it ensures you stay within your budget while purchasing a car. The rule also helps you stop overspending on things you don't require as you have a limited budget. The 20% down payment incentivizes the bank to approve your loan, mainly because they know how much equity you already have in the automobile. And lastly, the loan period of 4 years results in reduced total repayment. The 24-10 rule's drawbacks. Everything in this world that has advantages also comes with drawbacks. The 24-10 rule also comes with some flaws, but don't worry, these drawbacks are nothing compared to the advantages it brings. So here are some of the disadvantages. Even with a 20% down payment, getting accepted for a loan with a bad credit score might be challenging. The rule does not consider interest rates or other financing choices accessible to purchasers, which means there could be other opportunities provided by the dealer that could help supplement your vehicle purchase that is not factored into the rule. And because this guideline encourages individuals to purchase just what they can afford, you may miss out on the car of your dreams if your financial condition doesn't allow it. So that brings an end to this video. We discuss what the 24-10 rule is and some of the advantages and disadvantages. If you learned something new today, like this video and share it with your friends. Please consider subscribing and hit that bell icon to get notified when new videos drop.